पास सेव किया हुआ उसको हम लोग करेंगे तो उनको मैप के
Hello and welcome to this special broadcast. We're getting you a market update midday. Looking at the markets right now, it's the bulls in action. Much of it could also be attributed to shorts getting covered in the session. The Nifty is above 8,566, a good 500-point rally that we've seen since morning. And that's all thanks to the Nifty Bank, which itself is up nearly 7%. I want to run you through the contributors on the index, and then you've handed to Reliance Industries as well at a weightage of 11.49%. That's contributing 70 points to this rally right now on the index. HDFC Bank comes in with 663 odd points. Infosys another 39 points. ICICI Bank, HUL also adding about 33 odd points. That has a relatively high weightage of about 5% as well. So on your top rated stocks, a handful of 7 or 8 of them accounting for more than 50% of the bump up that we're seeing on the Nifty right now. Also, the other aspect to watch out for has been the India VIX. Now, the last 3 trading sessions has seen India VIX cool off significantly. Not just 3, you can probably extend it a little more, but I just want to take the last 3 days, because in the last 3 days, India VIX has come off from levels of almost 64 to levels of 50, where it's currently trading at. Today's session also sees a dip of about 20 odd percent. And the moment you start seeing volatility come off, you will start to see the weaker hands move out. There is a possibility of the stronger hands moving in and reducing the fluctuations in prices for stocks as well. And that's what exactly you're seeing in today's session. The other aspect being that today's contribution has come in from the pharma space. So you've got the Nifty Pharma Index, which is up almost 9% in today's trade, and everything in that pack is up. Within the Nifty Pharma Index, I'm going to pull up the MRR function, and that will show you the kind of gains that you've seen across the board. Kerala Healthcare has got gains of about 15%. On the index, Cipla has moved up about 11%. Dr. Reddy's has moved up about 11%. Some Pharma has moved up about 10 odd percent. Aurobindo Pharma is not on the index, but definitely it's got big gains of about 12%. DV's Lab, Glenmark, Biocon, Piramal Enterprises has the pharma element to it, was in the red, it's shifted into the green over the last few minutes of trade. But definitely a big day for the market. Let's bring in Ajay Bagga to get in a sense of how he's reading into the moves today. Ajay, we went down to levels of about 7,600 thereabouts. From there, 1,000 points higher. Do you feel things are starting to stabilize a bit more? Probably the news coming out from the globe with regards to stabilization of cases is what's fueling this rally. All right, I think we've lost the line with Ajay, but that's definitely something, because up until now, the markets were hostage to news and information regarding improvement of cases in coronavirus. Yesterday's session, while we were out of action, Europe was up significantly as we saw fresh cases, the number of fresh cases coming off, and number of deaths also in the US coming off. So all of these factors feeding into the positivity in the markets right now. Ajay is back with us. Ajay, what have you made of this move today on the back of some positive cues coming in from the globe?
Yeah, it's a wonderful move, very welcome to any long-term investor. Markets were oversold, so a move like this is welcome. We have to be careful. We are hopeful that the numbers are plateauing off, and that will be one precondition for markets to start recovering. Second would be the economic stimulus starting to show some impact on the ground. There it's very early days. So this is more an oversold rally with high VIX, high volatility now kind of normalizing. And normally what you will see is markets will become range bound in this kind of a scenario. So we'll have to wait and see. We'll need 3 to 4 days of advance to really say that a trend has been set. Right now, I'm little circumspect about it. So the first precondition of cases plateauing off, in some countries we are seeing that, in some no. Second would be economic stimulus. Some countries stimulus has started reaching down. In some it's not even been announced. The third big thing would be how the consumer sentiment improves. Unless you see that coming back, right now those readings are very poor given the health scare that we are going through. That will really lead to bottom formation and the markets turning. So I would say this is more, the kind of sharp rallies that you see within bear markets. That is what we are seeing globally. I would be a little circumspect about this rally today.
Okay. So, Ajay, let me talk about the aftermath of this. When global financial crisis happened, you took some time to form a base. You took, there wasn't cuts of 10, 12% at such frequency that we've been seeing in this current correction. And it took its own time to form its base. Since we've already seen the pace of this correction being extremely, quick and snappy, do you feel the aftermath of that would be a more prolonged lack of activity kind of a period for stock markets before the actual rally starts?
See, again, a lot will depend on how long do the lockdowns happen globally. If you have prolonged lockdowns, the economic impact is huge. What the governments are doing is that they are keeping money in people's pockets so that at least nobody starves, nobody really goes for lack of funds. But the economic logic of societies has got severely questioned. So I'm not very clear on, how that economic logic will play out, how soon we will see that recovery. So for that, first you have to come out of the lockdowns, then it will take a couple of months to some normalcy to come in the supply chains. And then you can start figuring out what is the impact on corporate earnings. So right now, very early days, I would say the economic destruction is going to be quite widespread and we have to be careful. You read Jamie Dimon's chairman's letter yesterday. He's talking of a very deep recession coming into the US and globally. So, when the smartest minds are talking of an economic cost coming, I would be a little careful. Again, I'm hopeful we'll come out of this, especially on the health side, we will recover. But a V-shaped recovery on the economy, I think that is doubtful, despite the kind of stimulus going in. But again, I would be very happy to be wrong. Being a long-term investor, my advantage is if the markets recover fast, I make more money that way.
Yeah, and I think that's something that everyone's, waiting to do, but not getting enough confidence to start investing in bulk. The other point being is two particular sectors. Today and the last few days, the activity in pharma has been tremendous. Is that going to be the next leader? And then what happens to financials? We've seen companies and banks and NBFCs talking and giving quarter four updates and the impact of COVID-19 on businesses. Some of them don't really sound all that promising. What happens then?
Yeah, especially talking of financials first, what we are expecting is that you could see a larger impact on the retail unsecured lending loans. Those could start hurting. Now, we have kicked the can down the road by deferring interest payments for 3 months. So April, May, June, you will not see any fresh slippages being announced. But that is shrouding the reality then, especially for microfinance institutions. What happens? Because there it becomes a very wholesale kind of default if defaults start occurring and if there is any political pressure or political mandate to default. Like you have farm loan waivers, you could see retail loan waivers being announced by some political governments at the state level. So there's a lot of uncertainty on the financials. What is working is the Reserve Bank has been quite proactive in cutting rates and in putting in liquidity into the system, in giving bankers the leeway to defer interest payments. So that will help for 2-3 months, but it's postponing. And we'll have to really see what is the damage done on the bank balance sheet. So be careful on the financials. NBFCs are in a deeper trouble because they will find it tougher to raise money from their normal sources. And secondly, the bad loans will increase. So NBFCs will hurt more. Again, this is a broad brush I'm saying. There will be companies who will be winners within those segments. There will be companies who will be hit even further. Coming to pharma, looking in a very good space. Again, these are cash-rich companies. They have been underperforming for nearly 4.5 years now, coming off that underperformance. And big scope to expand and for capacity utilizations. Again, not dependent on the economic scenario around. Their products are more or less very high on the hierarchy of consumer spends and government spends. A lot of government spend on medical coming up, and pharma companies will be taking advantage of that. So pharma looks like the sector which could probably be the leader into the next leg up for the markets.
Okay, got that. Ajay, thanks very much for joining in. Quick updates coming in and a quick opinion from Ajay Bagga there. So while we were talking about NBFCs, I think on the index, the only two that are in the red is Bajaj Finance and Bajaj Finserv. Bajaj Finance about 4%, Bajaj Finserv down about 1.5%. So it's not looking good. Some of even the larger NBFCs and the commentary that's coming about. In the best case scenario, Bajaj Finance Management says things could come back to normalcy in September. In the worst case, you're looking at a pushback to quarter 4 of 22. So that's really the stress point there. But thanks a lot for watching this update. Stay tuned to BloombergQuint.
The Union